Hello, everyone, and welcome to this week's edition of our weekly coaching webinar. I'm really glad that everybody could join us today. Today, we will be having a pretty cool day. Today, we're going to be diving in to a topic that's so important that I'm actually going to be cutting out the beginning and ending part of this webinar and using it as mandatory training for every new partner that comes in and sets up a new customer. I mean, that's how important it is. As a matter of fact, I feel safe in saying this is probably one of the most important webinars we've done this year because this is the essentials. This is everything you absolutely must tell a customer in order for them to have the right expectations coming in. You, me, us, our whole team, all of us want the exact same thing. We want you to be able to bring new customers into the finance suite and have an exceptional experience that's so positive that they get fantastic results and tell all of their family and friends about the actual success that they've had. So today I'm going to teach you how to do that because we've got a pretty good idea on what it requires to have good expectations set to actually make the customers happy. So we're going to be diving in, we're going to be coding this. And the webinar is going to probably be shorter than it normally is. I want to keep this video that we're going to make out of this intentionally short, probably about 30 minutes or less. So when we get into the heart of this, this might be shorter than some of our other webinars. That being said, I want to go ahead and throw a shout out to Jessica for winning down here in Tampa, Florida with First USA for winning the contest last month. We had a contest from 11/5 to December 5 for a $500 gift card. I contacted her today. I contacted her too late to get her on the webinar, but probably in a couple weeks. I think Dex is on next week. I'm going to invite her and see if she wants to come on and talk to us. So she had about 20 units last month to win the contest, and it was pretty cool because she spent part of her time up in Ohio on vacation and was emailing me wanting to know where she was in position for the contest. So congratulations to her. Look forward to having her on to be able to share some of her secrets with you in the weeks to come, and look forward to our next contest. We'll be having all different types of contests to reward you for bringing in new customers for financing and business credit. Look, I don't know if a lot of you have seen this yet or not, but this is the new partner home that's available in the back office. It's pretty cool. I've told Megan many times that I like to be kept intentionally out of the loop. She kind of has control of the design element of the finance suite, and I like to be surprised. It's like Christmas sometimes in the mornings when I wake up because new things have been released. And this is one of these things that I just accidentally logged in and noticed and hadn't even seen before. So this is the new partner home. We're working on something like this for your customers as well. It's just going to make it really easy to be able to do everything you need to do, whether it be check your business credit, check your financing commissions, manage your account, bring in new customers, any of those type of things. So now from your partner home, you could do all of these type of things. And it's pretty cool because you can join any of our social media here, even our private partner group. We have a partner group on Facebook that's locked down. The only people that can get in are our actual clients. So you can access that from right here. You can even access our podcast and Twitter and everything else from right here. And when we have our next live event, there's even a countdown to that event. You can access our newsletter here. So all different kinds of cool things on this partner home. If you haven't seen it yet already, when you do log in, if it's not the first thing you see, click on partner home and you'll see it right there. And this is just some of the many changes that we're working on. A lot of people have asked me things like the do-it-yourself. When is this going to roll out? And the answer is I'm not sure. We'd intended on this rolling out fall or winter, but what's happened is since we rolled out this new system, we've just seen explosive interest and growth. Literally, our unit sales in the last few months have doubled and more. And as a result of that, we're getting a lot of requests from you of, we'd like to see this feature, we'd like to do this. And we have so many new cool things in the hopper right now that we decided we wanted to work on the main suite more and get a lot of these things done before we even think of rolling out a couple other products, a few other products, 3 other products that we're planning on rolling out in the months to come. So this is where our time is going. We're doing a lot of cool things for you and the customers that I think you're really going to enjoy. They're going to really enjoy, creating a lot more value in the actual finance suite itself for your customers with a lot of new things we're adding and a lot of unique things that don't even exist that will be the only ones in the business credit space to provide. So you'll be seeing a lot of these things coming out in the months to come. And then once we make a big dent in a lot of these things that are on our list to release, then we'll be talking to you more about a few other products that we'll be rolling out to give you even more to be able to offer for your actual customers. So hopefully you've enjoyed this partner homepage, and you can also check out a lot of other cool stuff that's available in your back office as well. So that being said, I want to go ahead and get everything started today. So what we're going to do is we're going to dive in. I'm going to start this presentation. And again, I will tell you that, literally no exaggeration, this is going to be the most important presentation I'm going to do this year, because this is exactly what's required for your customers to be happy, for your customers to have an exceptional experience with the Finance Suite. So in this video, we're going to dive in. We're going to talk about what your customers should expect with the Business Finance Suite. We're going to run down and teach you exactly what you should tell customers, what they should know before they actually buy. And this way, you can make sure that you exceed their expectations before they even come in. So let me see here. I know I have this. There we go. I was hoping that toolbar would go away as it did. I'm going to hide this. Okay, so let's dive in. So for years, customers have enjoyed, thousands of customers have enjoyed working with the Finance Suite, the technology we've created, the team to get credit and financing for their business. But from time to time, we have customers who find what they paid for, it's just not in line with what they expected. It's not in line with what they thought they understood to be what they were buying at point of sale. So today, 100% of these cases that we've seen where the customers just aren't happy or the expectations weren't met, the reason really comes down to them having just unreasonable expectations. They came in expecting the Finance Suite to be something it wasn't. They came in expecting to get financing they couldn't, or expecting to get things faster than they did. But 100% of these cases, we've never seen a customer unhappy for any other reason other than the fact that they've come in and what they got was not necessarily what they expected to actually receive. So in these rare cases, the customer is really much harder to please, and also has a potential of risk of chargeback from you, the partner, which we don't want to have happen. You and our goal is the exact same: to make sure customers are happy. And to make sure if they're happy, then obviously they're going to go through, they're going to make their payments to you, they're going to give you they're going to give you referrals, everything you want. And on our end, it makes a really big difference, because we may need to make sure that the customers come in are manageable, that we can do for them what they think we're able to do for them. So again, we can meet or exceed their expectations, which is what we always strive to do every day. So the key to your success is and that of your clients is all about ensuring that they come into the process knowing exactly what to expect and that there are no surprises. It's equally important that their expectations are in line with the experience they'll actually receive upon becoming a client. So what they're told, what they come in believing is going to happen, it's important that they actually see that happening. It's very important, because look, this is a big purchase. When people spend thousands of dollars with anything, they're going to have a little bit of uneasy feeling and possibly buyer's remorse even after they do it. So when they come in and you've told them things, and then they come in and all of a sudden things start happening exactly like you told them they would, then they have a big sigh of relief. They're happy because sure enough, everything you told them is actually what's happening. And of course, if that doesn't happen, if they're having an opposite experience of what they expect, then it creates problems. But if it's exactly what they expect, then it's smooth sailing, whether they're coming in for financing, whether they're coming in for business credit and financing. So in this presentation, we're really going to dive in and decode the exact expectations you should set and what customers should be told. I basically taken, I think, about a handful of the main topics that we've ever seen a customer concerned about or have different expectations than what was actually able to be delivered. And I've condensed them to just go through the core things that you should make sure every customer knows before you bring them in as a customer. So this way, you and your clients can love the process of getting credit and financing and get the absolute best results. To us, that's what's most important. We want your customers to get really good results. We want them to come in and obtain large amounts of business credit and financing if they can qualify for loans as well, because that's what makes them happy. That's what they're coming into the process for, to get results, to get business credit, to get financing. And when they achieve awesome results, then that's when they're happy and you're getting congratulations congratulatory calls all the time, and they're very happy with what you've done bringing them into the program, as well as giving you referrals, which is important to grow your business. So one of the things that we often, not often, this is actually probably one of the rarest things that we hear, but some people from time to time are confused or unaware of costs that are just associated normally with the startup of a business. So in the very first step of the finance suite, customers will go through a credibility check process to ensure that they meet credit issuer standards. Now, I love this. This is one of my favorite parts of the business credit building process because I've applied for a lot of loans in my life, from mortgages to personal loans to business loans to personal credit cards to business credit cards. And to date, nobody has ever told me this is exactly what they're looking for on your application. And I love to know that. It helps me to know when I'm filling out the application what they're looking for, because if I know what they're looking for, I can know I meet the criteria before I even apply. And that pretty much secures my ability to get approved. Okay. And most established businesses will already have a lot of these items in this step done. Okay. But some of the newer, brand new startup businesses, people might be surprised that certain things that are involved with the setup of a brand new business. So it's important that your customers know that when setting up any business, there are essentials they absolutely have to do. And some require a purchase of some kind and some don't. That being said, some of the startup costs you should discuss with these clients include setting up an entity. Okay, this varies from state to state. Now, sometimes people have asked me, how much is step one? What does it cost if they needed to do everything to set up a business? How much does it cost? Well, really, that's a question that cannot be answered. And the reason it cannot be answered is because it greatly varies from state to state. So, for example, in Florida, you can set up an entity for about $65 online. It takes minutes to do. It's simple. It's so cheap. In states like Texas and states like California, it's considerably more. It could cost hundreds of dollars, $500-$600 in some states to set up corporations and entities. So this is going to vary from state to state. There's no average out there. Some states are very cheap, like Florida. Some states are considerably more expensive. But your customers should know that setting up their corporation or their LLC or partnership, whatever entity they choose to set up, and of course, LLCs and corporations are the preferred entities because there they don't have any personal liability. There's going to be some kind of cost associated with that. Depending on what state they're in will depend on the actual cost that is. So getting a virtual address, this, of all the things I've seen, is probably one of the most expensive. So we recommend a company called Regis, and they're about $100 to $150 a month. This is the most expensive thing I've seen really that is important in the business credit building process. And some credit issuers and some lenders will approve somebody based on a home address, but a lot of them won't. So a virtual address or real physical address is important. If somebody doesn't have a real physical address they can use, then they usually need to purchase a virtual address to have the best results. And this, again, is probably one of the most expensive costs involved with setting up a credible business because it's about $100, $150 a month. So getting a business phone number and fax number, okay, these are fairly cheap to do. I mean, I think Ring Central charges about $10 to $20 a month, depending on the package you're going with. They have more expensive packages if you want more features. And you can get a phone number, you can get a fax number, you can even get you can get phone number, you can get a fax number, you can even get a toll-free number as part of this. So it's not expensive, but if somebody doesn't have a business phone number now or a virtual phone number now, then they should know that they're going to need to spend possibly $10 to $20 a month to set up the phone number. Now, establishing a domain and putting up a website. Domains are fairly cheap. You can go to a place like GoDaddy and get a domain nowadays for about $12. And, getting a website is fairly cheap. You can actually go to places like templatemonster.com, and there's a lot of other website template companies out there that will get you a website template for $50 to $100. And you can find somebody on Fiverr.com or Upwork.com to put up the website for $50 to $100. So you could really put up a pretty decent website for $100 to $200 nowadays. Now, we have options in the finance suite as well for them to set up significantly more professional websites that cost more money and are very, very professional. But if somebody's really on a shoestring budget, they can set up a website for very cheap. A domain's about 12 bucks, and the hosting for a website is fairly cheap as well. We spend about $65 with GoDaddy, but we host a lot of websites. I think you can get it cheaper if you're just hosting one website. So again, customers, they should have a general idea, especially if they're price conscious, that these type of things are involved. Voluntary credit monitoring. With the finance suite comes with Experian Smart Business Data. We're going to talk about what that means a little bit later. But the customer should know that they can enroll for credit monitoring if they choose to do so. And if they do choose to actually enroll and get credit monitoring, there is a cost. It varies of usually $20 to $60 per credit or per credit reporting agency. And again, this is voluntary. They get Experian Smart Business, so they don't need to, but if they choose to take that step, then there is a cost or investment involved. Items that they might purchase using their credit. So, part of building business credit is that you're getting credit at a store, you're using the credit to buy stuff at that store, you're paying the bill. And this process gets reported to the reporting agencies, and that's what gives you a business credit profile and score. So somebody needs to know that if they're, as part of this process, they're going to be building credit, they're going to be buying stuff that they may need for their business. And obviously, they're going to need to spend money to have those accounts reported. So that's something else that you might want to mention. Now, it really depends on your customer. These aren't necessary things that you need to go through every line item with every customer. But if you have somebody in general that really is price conscious, you might want to break this down, or you might just want to talk to them in general. Look, Mr. Customer, in step one, we're going to go through and help set up your business credibly. Just keep in mind, if you don't have things like an entity or a real physical address, and you need a virtual address, or you need a phone number, a website, there are some costs involved in those type of things. Obviously, just because you're getting started with the finance suite doesn't mean that we're setting up your corporation for free, for example. And so just a simple conversation like that could usually be proficient. And then if they say, well, what kind of cost? Well, now you have a breakdown so you can dive in and give them a little bit more specifics. So some items also come for free through the finance suite. So for example, their 411 listing. Now, 411 listing is something I thought was very easy to obtain, but it's not. If you've ever looked online, you can't just go somewhere and get listed with 411. The service we use is called List Yourself, and I have a lot of people ask me about where to get this done, so I advise them to go to List Yourself. List Yourself, from what I know and what I've recently been told, is about $25 a month to get your phone number listed with 411. I haven't verified that. This is just what I've heard from some other people that I've guided to go there to get set up and have paid them. So this is a service we provide to the customer for free, and it's about a $300 a year service, and we pay for that service. This isn't a service we get for free. We pay a very large bill to List Yourself to actually get this service offered for our customers for free. We also help them get their DUNS number for free. Now, anybody can really get a DUNS number for free, but this is one of the most commonly asked questions. Most people don't know how and then they get sold to go. And even them, they got bamboozled by Dun& Bradstreet Credibility and ended up paying a large sum of money to get their DUNS number. Well, they don't have to pay for their DUNS number. We guide them through this process so they don't have to actually pay to get that DUNS number. Now, of course, there's a couple different ways to go. If they get credit monitoring with D&B, that's pretty cheap, like 30, 40 bucks a month, they'll get their DUNS number right away. If they don't want credit monitoring with D&B, it might take up to 30 days for that account to actually get reported, for them to, or excuse me, it might take up to 30 days for them to deliver the DUNS number to them. So they automatically slow down the DUNS number if you're not paying for credit monitoring, because they want you to pay for credit monitoring. So if somebody pays the 30, 40 bucks for credit monitoring, they'll get the DUNS number right away. If they don't, they're still going to get the DUNS number for free. It just takes about a month to get. Experian Smart Business Data, not reports. So when a customer comes in, they get access to Experian Smart Business Data. It tells them, do they have a credit profile? Do they have a credit score? And how many trade lines they have. Now, when you build business credit, it all comes down to trade lines. You need to know how many trade lines you have reported to know when to move to the next step of building business credit. So we don't give them a full report with all the scores, but they do get access to how many trades they have. Did they have a credit profile? Did they have a score? That's the necessary information. somebody needs to build business credit. So they don't need to pay for credit monitoring if they choose not to, because this is free. But it's important to clarify to your customers that these are not credit reports they're getting with Experian. This is just a basic snapshot of what their Experian credit profile looks like, so they'll know if they have the criteria met to move on to the next step of building business credit. So let's move on and talk a little bit about business credit building time frame. So from experience, customers want the most money they can get right now. Everybody you're going to talk to wants a lot of money as quickly as they can possibly get it. Well, keep this in mind and know that they'll often hear what they want to hear, so tread lightly with what you tell them regarding time frame. This is important. You have to really make sure that you go through and give them clarity on the time frame, because if you mention even one thing that sounds like it's faster than it is, then they'll usually go with what they want to hear versus what's actually being said. So business credit building is the fastest way for many customers to access money. Look, if somebody doesn't have collateral, cash flow, or good credit, business credit's the only solution for them. It's the fastest way for them to get money. And you might run into people that say, I need $100,000 in a month. I have bad credit, I have no collateral, and I don't have cash flow. Well, guess what? Business credit's the best solution. They might go with you, they might not. But if they don't go with you, in 2 months, you're going to be able to contact them and know they're still out there looking for something that doesn't exist. Business credit is the fastest solution for a lot of people, unless they have something that makes them lendable, which we'll dive into here in a little bit later. So there's no reason to embellish what's possible. The bottom line is, this is a fantastic solution for people that can't get financing. It's a fantastic solution for people that can get financing, because it's going to get them better terms long term, and it's the fastest way they're going to build credit, and even faster than even some financing options take to secure it. So to set up their credibility and get access to their reports should take about a week. So the first steps of building business credit, the financing suite, to set up their business credibly, to make sure that they access their business credit reports and go through those initial steps. This takes about a week's time. But of course, the customer controls this, right? I mean, when I first got access to the finance suite, I went through step one within minutes because I met all the criteria they needed me to meet. Some people don't. So a well-established business is going to make it through this just faster, and somebody that's brand new is going to take longer. And if they drag their feet and take their time applying and doing the things that need to be done, then that can take more time as well. So within about a week, they are then positioned to start applying for vendor credit. They get themselves set up credibly, they get their reports, then they're applying for vendor credit, usually within the first week. Again, they haven't dragged their feet and they've done the things they need to do. Then they can start getting approved for real net 30 accounts. Now, these are not revolving accounts. These are accounts that might be due in full in 10, 15, 20, 30 days. Okay, but these are the initial accounts used to build business credit. They can usually start securing these in about a week's time. And it takes about 60 to 90 days for those accounts to report. Now, some people look at this as a task and they say, oh, vendor credit, I don't want to do this. Other people welcome it. And again, Mr. and Mrs. Sample were on, a few weeks ago. And this is one of the things that they went over was, hey, I used the money to get computers, to get office supplies. We got our office set up using that initial vendor credit. So, embrace that. Embrace the fact that you're getting access to a lot of credit that you can use for your business, even if it's on net 30 terms, and use that credit wisely to be able to actually apply it to your business and grow. And that credit will then report usually within 60 to 90 days. Dun & Bradstreet says it could take up to 90 days. On average, we see customers have these accounts reported within 60 days or less, sometimes as short a time frame as just a month or 30 days. So to have it reported, they must purchase $50 or more of items. And then we recommend they do this every month until those items report. This is like a bureau requirement. The reporting agencies don't want to report credit if the person's making payments or buying stuff less than $50. And some creditors are a little bit different, but to be safe, just have them know that on average, you should probably be buying about $50 worth of stuff or more to make sure that those accounts actually get reported. And don't just buy $50 worth of stuff and be done. It really makes a lot of sense to, if it's January and you buy $50 worth of stuff, hey, buy $50 in February, buy $50 in March, do that at least 3 months until you see that account report. If it reports after a month or 2 months, you might not need to do that or want to do that, but you should buy every month until they're really reporting, and that could take, again, 60 to 90 days. And approval limits on these type of accounts are usually about 500 to 2,500 bucks. So a lot of people say, how much credit can I get? Well, that's kind of a crazy question because it depends on how much you apply for. You can have somebody with their consumer credit that applies for a credit card a month, a mortgage, and a car loan all in the same year. Or you can have somebody that only applies for one credit card or might not apply for any credit in a year. So how fast credit can be built depends on how much credit and how fast somebody is applying for that credit. So it really depends on their own timetable. And there are not a lot of these true starter accounts that exist. And you want to let your customer know that. The reason most entrepreneurs don't have business credit, they have no idea where to go to get starter credit and what exactly is needed to get approved for starter credit. So that's what the Finance Suite does. It maps out the step-by-step process in order so customers know what they need to know to be able to go through in order and get approved for business credit. So they need to know that, hey, look, you might need to buy office supplies at Quill versus Staples. No big deal. You're still going to get office supplies at a great rate, and the account will report. And once you start building business credit, you can go to an Office Depot and Staples. But again, that's kind of the small sacrifice you make to build business credit is you might buy some things you wouldn't normally buy, or you might do business with some vendors that you didn't know about and wouldn't have done business with without the system. But that, again, is the benefit of these kind of accounts, as they report that account credit to the business credit reporting agencies. With 5 of those accounts reported, they can then start to get store revolving credit accounts. And that takes about 60 to 90 days in total time. So they get the vendor credit, it reports within 60 to 90 days, then they can start applying for store credit. And approval limits usually range from about $1,000 to $4,000. Some exceptions are Dell. Dell is notorious for giving very high limit credit accounts as high as $10,000. Okay, but a lot of the credit limits they're going to start getting on the initial store credit accounts range from $1,000 to $4,000. A lot of the ones we see are $2,000, $3,000, $4,000, $5,000 range. Okay, that's what they'll often see with store business credit accounts. And this credit usually takes about 60 to 90 days to report, just like the vendor credit did. It takes about 2 to 3 reporting cycles for it to actually get reported. And then after they have 10 total accounts, including vendor and store credit accounts, then they can start applying for cash credit. And it takes about 120 days. So about 4 to 6 months from beginning to getting actual Visa, MasterCard cash credit. It takes about 4 to 6 months to get them there, even if they are just starting their business. Now, if they came in and they already have several other good reporting business credit accounts, then it might slow down this time. It might expedite the time frame. But a lot of people come and say, hey, look, I don't need the full finance suite. I have my DUNS number and a Paydex score. Well, the Paydex score doesn't mean anything. It just means you paid your bill on time. The real question becomes, how many trade lines do you have? And in almost any of those cases, somebody will go, well, I have only 1 or 2 or 3. Well, you still got a lot of work to do to get to cash credit. So it might expedite the time frame if they have some trades reporting already, which most don't. But even starting from scratch, it takes about 120 days, about 4 months to 6 months to start getting cash credit cards. These are going to be Visa cards. They're going to be MasterCards. Okay, MasterCard credit cards. Discover doesn't offer personal guarantee credit anymore, and American Express takes a lot longer. I mean, it might take you a year or 2 years to really get an Amex card with no PG, because or you have to have a lot of revenue or time in business. So Amex is the tougher of the cash credit cards to get. Discover doesn't offer business credit any longer. And sometimes people will ask me, hey, Ty, there's this lower level business credit system I've seen out there. What's the difference? Well, the difference is a lot of those systems are putting out their outdated information. And I always laugh at that because I'll see things like KeyBank that no longer offers cash credit, or Discover cards, which no longer even offer no personal guarantee credit offered. So here's the order: Visa cards, MasterCards, then they'll eventually get up to American Express cards. And there's approximately about 10 of these sources in the back office. Sometimes we'll have 12, sometimes we'll have 9. It just depends because things change so much in the space, and they can usually get limits of about 5 to 10 grand. So a lot of people will say, hey, what kind of cash credit can I get? Well, there you go. They can usually get about 10 of these cash credit cards with limits of about 5 to 10 grand, and they can start getting those within 4 to 6 months. So usually within the first year, it's reasonable to say that they can get about 10 of these type of cash credit cards with limits of about $5,000 to $10,000. Now, you don't want to embellish this. I literally intercepted an email last week where the customer was being told they were going to get $900,000 worth of business credit, and they were being told that they could set up multiple multiple corporations and do all these crazy things to get it. But that's the kind of thing that gets you and us in trouble. And then when those customers come in, they have that expectation, which is nearly impossible to meet, because realistically, within the first year, they're probably going to get about 10 of these cards for about 5 to 10,000. Then they'll be able to get more in the future and also be able to get higher limits. But that's a good expectation of what kind of cash credit they can get within that first year. So we do offer a $50,000 guarantee, and it guarantees that the customer is going to get 50,000 within 12 months, or we'll work with them until they do. But understand that the guarantee that we offer is mainly in place because it helps people that stop along the way. So we have some people that will get started, then they forget about it. They get busy. Life gets in the way. They don't finish building their business credit. And then what happens is they come back a year later and say, hey, I really want to get this done. I started, I was 4 months in, and then I quit. Am I out on my own now? And then in that case, we say, absolutely not. We restart their coaching and we start them over as if they're a brand new client. So the guarantee's in place. So a customer doesn't forget about it, walk away, and then come back and us go, nah, you're on your own. It's there in place to say, hey, look, life gets in the way. We get it. Let's restart you so you can have some success if you're really dedicated to doing this. That's why the guarantee really exists. So you got to be careful. You should not promote this guarantee on any marketing materials with customers. You really shouldn't. Nor should you even set the expectation or talk to the customer about this guarantee unless you absolutely need to, because in doing so, what happens is we see in a lot of cases, their expectations are not in line with reality. So for example, a lot of people, the people that have the most problems with customers coming in with unreasonable expectations are people that mention the guarantee. If you're talking about the $50,000 guarantee, if you're using that as your selling point, your closing point, your marketing point, more than likely you're going to have problems with the customer from our experience. They just come in and their expectations are out of line. They think you're going to get a $50,000 credit line right away. A lot of them do. Even though our partners say the right thing to the customer at point of sale, they still come in with expectations that are out of whack for some reason. They still come in believing they're going to get $50,000 worth of cash credit right away or a $50,000 credit line right away. So what we've learned is just stop talking about the guarantee. You won't see on very much of any of our materials that we even promote this anymore because of this reason, because the partners that promote this, that market this, that use this as their selling point have the most amount of problems with customers coming in with out of line expectations, even if they presented it right, just because customers hear what they want to hear and think they're going to come in and get 50,000 in cash right away. So you might see out there that we have a guarantee. You might wonder why we don't talk about it. That's why we don't talk about it. We don't talk about it very much because we don't want you to promote it, because in promoting it, people kind of hear what they want to hear, and it usually creates problems when you bring that customer in. So let's now talk about getting business loans and credit lines. So the Finance Suite offers access to business credit sources as well as financing options, credit lines, loans. So any business with an EIN number can get business credit. And that's what we just talked about. I just talked to you about business credit, how they could get vendor accounts, how they could get store credit, how they could get cash credit. That is business credit. That is corporate credit. That is EIN credit. And any business can get it. Okay, any business. If you open your door today, you can take the steps in the system and get business credit. It's a great catch-all solution. Anybody can get it. But only some businesses are going to qualify for an actual loan, a credit line, a loan. So we recommend an approach called the 3 C's to knowing if someone can get financing or not. I'm going to walk you through those in depth right now. So the first C is cash flow financing, okay? And this basically has to do with a customer that has 10,000 or more in recent monthly deposits as verifiable per their bank statements. Excuse me, I'm taking a little drink of water. So if they have this, they might qualify for a cash advance. So what happens is they're going to look at recent monthly deposits. Now, I say recent in bold for a reason, because I talk to a lot of people that say, hey, I have 12,000 a month coming in to my bank account. Then when you get their bank statements, they only have 6. And you ask them about it and they go, well, I had 12 grand last year. Well, you need to clarify to your customers, look, for cash flow financing, how much do you have? If they look at the last 6 months of your bank statements, what's the average monthly deposits you have on those bank statements? And they should be limited. They shouldn't have a bunch of non-sufficient funds on their bank statements. They need to have really less than 5. And there's a reason for this. With cash advances, the money is deducted from their bank account daily. So if the lender sees that they don't have money in their bank account often, then they're not going to want to lend money, because they're going to be taking more money from the bank account. The customer customer doesn't even have enough money currently in their bank account to manage what they have. So they should have at least 5 deposits monthly in their bank account. These are minimums, okay? So if somebody has 5 deposits, they really prefer 10, 15, 20. At one point in time, we advertised that they needed 30 deposits in their bank account. So the more monthly deposits they have, the more the lender feels secure. They don't want to deal with somebody like a real estate agent that only has 3, 4, 5 large deposits. They want to deal with somebody that has a lot of little deposits because, again, they're going in and deducting their payment daily. And they should have positive bank balances at the end of the month, same as the NSFs. They need to have money left over in the bank account for the lender to feel comfortable lending them money, because if there's not enough money in the bank account, well, the lender's going to say, well, how am I supposed to get paid back if you don't even keep enough money in your bank account now? They're going to need at least a 500 credit score for approval. They won't get approved if they're in a bankruptcy, and many industries are restricted, including financial services and vices. Okay, so for example, credit repair is an industry, and I was just speaking with somebody earlier today that's interested in applying to get financing. They're in the credit repair industry. And they said, hey, look, I want to get financing. I'm in the credit repair industry. I'm having a hard time. And they said they went to Cabbage and a couple other places and got denied because of industry. Well, don't take that personally. It's not credit repair they have a problem with. It's financial services. So insurance agents, real estate agents, mortgage brokers, credit repair, if you have anything to do with what they deem credit or financial services, even us, we are considered high risk in a lot of the lending space because financial services as a blanket industry is. Also vices, people that are in the porn industry, people that sell it online, people that sell anything that's kind of a vice related thing are high risk as well. Gambling, for example. And those are just some. So there are other industries that are high risk, way too many to go over here in this. But I will tell you that, again, just because somebody meets the criteria I've outlined so far doesn't guarantee approval. There are other things that could come up, such as the industry they're in being high risk. Customers should know that other things can come up during the approval process that disqualifies them. Okay, so for example, I had a partner call about a year and a half ago that was completely frantic. Actually a really good buddy of mine. He lives down here local. And he said, my deal's not closing. My deal, they're not closing the deal. Well, I dug in, and the reason they weren't closing the deal is because they went to the guy's website, and the guy's website has a big going out of business sign on it. Well, guess what? A lender's not going to lend you money if they go to your website and see a big going out of business sign. But it just gives you an idea that these type of things can come up. Sometimes they do a check and find out that the person has all kinds of, financial related felonies against them. So there's all kinds of crazy things that can come up in a loan process. And I can tell you, I've spent about 16 years in financial services. I've done a lot of mortgages amongst other loans. And a lot of this stuff comes up, especially in the end. So a deal's not done until it's done. The customer should know that a lot of these type of things come up. If your business looks like it's going out of business, if you're trying to hide other merchant advances and loans and not tell the lender about it, there's so many circumstances where things come up, and usually it's things that the customer knows they should disclose to the lender but chooses not to, and that in itself is what causes the problem. So also having too many risk factors can disqualify them as well. So if they've got a 500 credit score, they've been in business barely a year, they meet the minimum requirements for non-sufficient funds, they meet the minimum requirements for deposits, those things all add up. So I've given you an idea of minimal qualifications for approval, but if somebody only has the minimum in every single section, it's going to be pretty tough to get them approved. And if they do get approved, they're going to pay a much higher rate than somebody that actually doesn't have the lowest, that isn't as high of a risk. So this is high risk money, and they're going to pay for that. It's about 20 to 45% rates depending on risk. Now, rates can be lower with good credit and longer time in business and other factors that make them lower risk. Okay, and over 80% of the clients that we see for this program renew. They come back and get more money. So a lot of people, ourselves included, we're very scared just because the rates are high, and we're not used to seeing rates like this in the consumer world. So at first, when we started offering this kind of financing, we kind of stayed away from it. But then customers kept asking us for fast, easy money. We gave them this as a solution, and they kept going for it. The other thing that was weird that we noticed was that when we would offer customers the option and say, hey, look, you could pay a higher rate in a shorter term or get a lower rate in a longer term, they would usually choose the higher rate. They cared about having a lower payment more than they did the rate itself. So again, a lot of people with this kind of financing, over 80%, renew and get more money. So what happens is they only end up paying half of whatever rate they're usually quoted. So if somebody's quoted a 30% rate, then they get an opportunity to renew that advance halfway through. Well, then they've really only paid the equivalent of 15% on that money so far, and now they're renewing. And that's why these make a lot of sense in a lot of cases, because they're going to pay more money in the beginning, but once they prove themselves, they're going to be offered longer terms and lower rates. They never end up paying the full amount that they were quoted to begin with, because they paid it off half of the time, so they only paid half of that rate. And then if you really look at them renewing all the time and them only paying on half the rate that they're actually being charged, then it actually kind of makes sense. These people in reality are paying about 8 to 15% for very fast, easy money. That's actually pretty good. So that's just something that might help you overcome that objection if you deal with it from customers. There's no fees. They don't charge upfront fees or anything like that on this actual program. It's just all about the rate. And funding can take place within a week. It's very fast. We've seen deals close in as little as 24 hours, but you wouldn't want to set that expectation. So depending on how quickly they are to get what's needed for approval, like their income docs, or how quickly you are to get those, will determine the time frame. But it's pretty fast, easy money where they can usually get it within about a week or less. Someone with really good credit, and this is the second C, credit, of 700 or higher, or a partner who has good credit, and I mean a partner, not as in you as a partner, as if they have a credit partner that has good credit, can also get unsecured financing. These are business credit cards that report to the business reporting agencies with some personal reporting options as well. They will often get approved for 3 to 5 times that of their highest revolving credit limit account now. They're not going to look at a home equity line of credit, but they're going to look at the highest revolving credit card limit that that person has. And if it's 10 grand, they're usually going to be able to get about 3 to 5 times that amount, about 30 to 50 grand, through 3 to 5 different credit cards. So these are business credit cards. They have a limit of high 10,000 on their credit report now. They might get 3 to 5 of these type of business credit cards, giving them a total limits of about 30 to 50 grand. And these have normal rates of normal business credit cards, but they usually offer 0% intro rates for about 6 to 18 months. So they're very, very good for startups. This is often advertised or promoted as 0% financing, but I do see some unethical people out there that don't promote this as what it should be, which is a good credit program, and try to convince people they could fix really bad credit to get it. So you got to be careful if you hear something like that. It sometimes does happen, but these are promoted as 0% rate programs because they can get 0% for about 6 to 18 months. They need to have about 3 inquiries or less on each bureau within the last 6 months. They can't have any derogatory items on the report. The approvals that we see often range from about 35 to 75 grand. We see people get 10, 25 grand. We see people get 100,000. I've seen people get more than 100,000. Before, more than one case. But on average, we see a lot of people end up with financing of about 35 to 75 grand on this. And it'll take about 3 weeks to actually get their cards. So this is a fantastic program. There's not a lot of financing out there for startups. Nobody is going to go out and apply and get approved for this much credit on their own, because once they have 1 or 2 inquiries on the credit report, the other sources are going to shut them down. They'll deny them because they know they're out applying for a bunch of credit. So this is not offered by a bank. It's not something they can walk in their bank and get. It's not something they can get on their own. There's only about a handful of credible sources in the country that even offer it. So it's really good program, especially for people that are startups, because it's no doc. And once the cards are received, they're going to pay a 9% plus fee in fees to the financing source. Your customers have to know this. They need to know rates. Nothing's worse than a customer coming in, they have an idea of unsecured financing, you told them about it, then they come in and they for some reason think they're going to get the money for free. It makes no sense. They need to know that they're going to pay about 9% in fees or more. Okay, and I say in more because most lenders charge 10 to 12%. One of our main lenders charges 10%. We've got one other that's as low as 9%. So you might even want to tell your customers they're going to pay usually about 10% or more. And that way, if they get 9, they'll be pleasantly surprised. And with this new lender we're checking out, they're even giving you the availability to choose the rate and make a little bit more in commission. So again, I don't want to promote that highly because this is a new source that we're checking out, but you should tell the customer they're going to pay about a 10% success-based fee once they get approved for the cards. It's not up front, but they're going to be served an invoice when they actually get approved. Don't let your customer come in and not know this on this program, and you've told them about this program, because again, then they're going to come in and not go for it because this is going to be an unpleasant surprise. So if customers have collateral, they can also qualify for collateral-based financing, a 401k. They're usually going to pay about a $2,000 fee, not out of pocket. It'll be rolled into the loan, but they will for that program. So, stocks is another type of collateral, inventory, free and clear equipment, account receivables, purchase orders. If they're an insurance agent, a book of business, cash and personal homes do not work as collateral. Some people might ask you that. Cash and personal homes will not work as collateral, but the other things I mentioned will. So if a customer has this type of collateral, stocks or equipment or account receivables, they can qualify for account-based financing or collateral-based financing. Rates are usually less than 5%. And funding usually only takes about 1 to 4 weeks, depending on the program that they're going for. I talked about several different programs, so it depends on which program. And this is the rarest of the 3 C's you're going to deal with. Most people don't have collateral. That's why they can't go to their bank and get a loan. They can't get an SBA loan because they don't have collateral. So you can ask people, do you have collateral, stocks, 401k, equipment, inventory? Most of them are going to say no. Or they're going to say something that doesn't qualify. Well, I got a home. Well, I've got cash in the bank. Well, I've got equipment, but I have a loan against it. I have inventory, but my inventory is whatever car parts, it's something that just won't qualify. So very few people that you talk to are really going to have collateral to qualify for asset and collateral-based financing. Most people who do qualify for financing are going to qualify for more of a cash flow-based financing or unsecured financing from what we found. So most people you're going to talk to are going to want true credit lines. This comes up all the time. And to get approved, they're going to need a 720 plus credit score. And they're also going to need good tax returns to show increasing and positive gross revenue and profits. They're not going to get approved for credit lines if they have tax returns that show a loss or not much of a profit. This pretty much rules everybody out. I had a guy like this yesterday. Hey, I want a credit line. I don't want a merchant advance. I don't want credit cards. I want a credit line. No problem, sir. You need a 720 plus credit score. You need tax returns that show good gross revenue and profit. And then I got back, well, let me tell you the story. No, I don't need the story. It's that simple. You either have really good credit and good financials or you don't. If you have good credit and good financials, you get a credit line. If you don't, you're not going to get a credit line. And again, in his situation, he used his personal credit to fund his business, and now his personal credit scores are low. And I told him, I empathize with you. That's why we help people build business credit, because of this exact circumstance where you used your personal credit to fund your business. Now you need real money for your business, big loans and credit lines, and you can't get it because you used all your personal credit cards to fund your business. When you do things the right way and use business credit instead, your personal credit stays intact. You could easily come in and get the credit line and get the loan now. But because business credit wasn't used and because you're not even trying to fix the problem by getting business credit now, you're still stuck in that position. It happens. Most people want credit lines. That's what it takes to get them. Rates are usually under 8% on these. There's several different types that we have. Closing times are much longer than normal financing. It takes about 6 weeks. Okay, lenders will often tell us 4 weeks, but they usually take longer to close credit lines from what we've seen. There is an exception. There are some limited cash advances in the merchant advance space. So they can pay a high rate merchant advance, get a merchant advance, and get part of their advance through a credit line. These are some new things that are being tested in the industry. So there are some credit lines for credit challenge people, but again, they're kind of merchant advance credit lines. The lower rate credit lines require good credit and financials to be able to get approved. Okay, so programs. We offer most of the legitimate funding programs available today. This means we often add new programs. Okay, and we often remove less popular programs or ones that no longer work as they should. So as we add and remove these programs, we change the funding program cheat sheet and guidelines. I think I've got add spelled wrong there. I always mess that up. Keep an eye on both and let us know if you see a program come up that's not listed in there. Okay, so look, we have programs that come and go, and when they come in, we promote them everywhere. And then if they go, we try to remove them from everywhere. But sometimes you might get an email or those type of things that reference a program that we used to have. If that happens, just be kind to us and let us know, and we'll remove it from wherever it is. We try to root these things out from everywhere they are. But we have them in so many places that sometimes we miss some things here and there. So keep that in mind. So coaching. Business Finance Week customers receive advising and coaching as part of the business credit building process. This coaching is not a done-for-you program. So the customer should know that they will be the ones selecting the credit they want, applying for the credit, and actually using the credit. These things are not done for them. The coaches are there to assist during the process, not to execute, not to do the process on the customer's behalf. Believe it or not, I still run into this problem. We had a partner that every customer he brought in, we had substantial problems with. I mean, they didn't even know there was a finance suite. They didn't even know they had to log in anywhere to build their business credit. They were completely led into believing that they were going to do it all, that it was going to be done for them. You can't do that. The customer needs to understand that their coaches are there to help them and assist them along the way. But they're not there to do it for them. The customer's going to have to do this with the help of the actual coaches. Coaches are going to call the customer, as well as the customer. They receive incoming calls from the customer. Coaching hours are from 9 to 7. Okay, those are the times, Eastern time, that our advisors and our coaches are actually on staff. Voicemails and emails received after those hours, after hours, are going to be returned the next business day, first thing. And customer contact is logged in the customer notes, and it's available in your dashboard. So as our team reaches out to your customer, they're leaving a note about the transaction, and that's available in your client dashboard so you can monitor it. So customers are going to get 5 phone calls in the first 5 days, and weekly to bi-weekly calls in the next weeks that follow. You can get the exact call schedule. It's right here, suitelogin.com/advisory-team-service-schedule. That tells you what type of calls they're getting, what happens on every call. It gives you an example of exactly what the call is like, so you know exactly what's taking place on these customer calls. This doesn't have to be a mystery. You can even show this to your customers so they know exactly what to expect and what takes place on these calls. So suitelogin.com/advisory-team-service-schedule. Gotta have to make that an easier link for us. But at this point, that is the link you can check out and see exactly what happens on these calls. And some calls are going to take about 30 to 60 minutes. And this is the give and take. Look, we try to make sure that every call is answered. As a matter of fact, over 90% of incoming calls to our advisor team are answered. But keep in mind, at the same time, we're trying to provide exceptional service to the customer. So that means our advisor might get on the phone call, and they might be on a call for 32 minutes to an hour. Now, we all appreciate that, because that's what gives the customer exceptional service. But at the same time, if we've got 3 or 4 advisors on staff in a given time period that are manning calls, and 3 of them are on those type of calls, and 1 of them gets on another call, then your customer might hit a voicemail. It might happen. It's a give and take, because we spend so much time advising and talking with these customers. Now, hey, the call might be 5 minutes. It might be 3 minutes too. The advisor might just call to check in. The customer rushes them off the phone, says they don't have time for them, and that type of thing happens too. Okay, so for example, one of the same clients that we had a problem with his customers that I just actually finished up describing had that issue. He was wanting us, we're like, look, we're trying to call your customer. He's telling us he's at work, he's busy, he doesn't want to talk to us. Well, you need to insist to him that you're going to talk to him and no, we don't do that. We're not here to bully the customer. If we call them and they say they're busy and they don't have time to talk to us, then we're going to have to call them back. So you've got to keep that in mind. We'll spend as much time on the phone with the customer as they need and want from us, but sometimes they're just in a position where they don't want to talk or they don't have time to do so. So again, over 90% of our incoming calls are answered, and 100% of voicemails and emails are returned. There's never a time we don't return a voicemail, or there's never a time we don't respond to an email. It doesn't happen, period. As a matter of fact, sometimes I'll have people say that happens, and they don't understand that we really, really investigate this deeply. So what we'll do is we'll get the customer's number, we'll get the partner's number, whoever it may be. We look at all of our call logs, we look at all of our voicemails. We make sure we know the exact facts. And I'm telling you this because sometimes this happens with a customer. For example, I had a partner that reached out to us last week and said, hey, I'm frustrated because here's what happened. I put a customer in, he was never contacted, and then I contacted you guys at 4:30. All I got was voicemail, and then I sent an email and got a prompt response, but it said that it was after hours and the customer wasn't going to be able to be called till the next business day. Well, what really happened in that circumstance was that they called at 7:30 at night, not at 4:30 per the records. And then we were well closed. We were closed for that shift. So yeah, they did get a prompt prompt response. Our team still responded at 7:30 at night on a Friday evening, letting them know, hey, look, I'm away from the phone. I can't even get to this customer till Monday. And the customer actually was called, but the number that was supplied to us was only one, and the customer didn't have voicemail set up. These kind of circumstances are what sometimes happens if we investigate. So if you have a customer that comes to you and says, hey, look, I tried to get in touch with them, I couldn't, then they didn't leave a voicemail that would have caught a call back. Or there might be a problem where we need more phone numbers for them and we're unable to get in touch with them. Or they might have just happened to call when all of our advisors are on the phone with another client, which sometimes happens, and they didn't leave a voicemail. So again, those things might come up time to time, and that gives you some kind of background of the kind of statistics that we have, what we track, and how some of those things happen. So getting in touch with your customers is a hurdle we often overcome. Calls will come from business credit advising teams. So you need to tell your customers this. Look, they're going to get a call from the business credit advising team. They need to know to expect that so they know who we are when we call. And sometimes when trying to return their call, we run into issues. We're not able to leave voicemails. We're leaving messages that don't get delivered. We're calling somebody in their office, leaving a message there, and that they don't get it to the actual person, or they might not know who we are. So try to help us with these things. Let them know they're going to get calls from the business credit advising team. Also, make sure we have multiple phone numbers from them. So if we can't get them on the first number, we have other numbers we can call. And sometimes if our team has your information in front of them, they'll even say, hey, this is the business credit advising team on behalf of Ty Crandall. They don't expect that, but they might do that. And we're trying to do more of that if we have that information readily available. And again, if you have any questions, or somebody says, hey, look, what happened? I need them to call me. Reach out to us, advisor@businessfinancesuite.com. And you can also leave a note in your dashboard if a customer hasn't been able to make contact with us, and we'll always promptly make contact. So again, I hope you enjoyed this. I mean, this goes through everything that you should know regarding expectations for your customers. So now you'll know exactly what your customer should be expected to receive when they actually come in. Now you can set the right expectations for customers to make sure that they have a really top-notch experience as part of the Business Finance Suite family, because we want them to. Our goal is to help them get as much credit as possible and have as much success as possible, so they're happy, you're happy, and they give you more referrals and you bring in more business. Everybody wins. And remember, you are a partner with us. We call it partnership for a reason. We're a team. If you bring the customers in with the right expectation, our goal is to massively exceed those expectations. So if the customer comes in with the right expectation, that's typically what has them leaving very, very happy with a really, really, really positive customer experience. So that being said, I want to go ahead and open this up for questions. I didn't know how long this would take. It obviously took longer than I thought it was, but I hope you got a lot of detail from this. These are the things that have to do with biggest expectation concerns that we see anytime that we've ever run into a problem. It's been usually because one of these expectations wasn't in line. So now you know exactly what we can do all the way through the process, from building business credit, getting financing. You have information from the coaching calls, what takes place there. And as a matter of fact, I'm going to go ahead real quick while I have time here, and I'm going to show you I'm going to show you that website with the servicing. I didn't have time to do it in that because I wanted to do that video and I wanted to make it as short as possible, but I will show you this now. Hopefully this is going to work okay, because I said it like 9 times. Okay, so here is the actual servicing schedule. And I won't read all this to you, but you can see that the welcome email takes place, the welcome phone call. You can click here and view an actual typical phone call. So you can see, hey, this is a script, a transcribed script of what takes place, or an example of that welcome phone call. And you can also see that they're getting the regular follow-up and how all of this works. So make sure you check out this link. As a matter of fact, I'm going to go ahead and type it in the chat right now. And again, if you have any other questions, go ahead and type them in so we can get those questions answered. Okay, so there you go. So if you have any questions, go ahead and get them typed in. I want to make sure I get your questions addressed. And there is the actual coaching schedule. So you can see how that works, what takes place in the welcome call, the welcome email, the regular follow-up, the completion follow-up, all those type of things. So your customers know what to expect. You can even give this link to your customers so they can see exactly what to expect regarding their actual phone calls. So I don't have any other questions, so I'm going to go ahead and wrap this up for today. I hope you got a lot of information out of today. My goal is to make sure that every expectation that you're setting with the customer can be met by our team. That's what makes for a happy customer. That's what makes you happy. So now you know how to set all the right expectations, what could be done, time frame wise, answering phones, all those type of things. So now you can give the customer the most and the best information. And keep in mind, you don't necessarily need to go through all of this information with the customer bringing them in. For example, when we talk about the first section of cost and startup cost, you could just say, hey, Mr. Customer, look, obviously you're going to pay normal things associated with setting up your business, like getting your entity set up and getting a phone number and a website and those type of things. If they ask for more detail, now you have it. You don't need to tell every person if they're going to qualify or not, but you need to know who might qualify and who might not. Hey, Mr. Customer, do you have collateral? What is your cash flow? What is your credit like? If they don't have credit, collateral, or cash flow, they don't qualify. So you need to tell them right up front that they're not going to come in and get financing. Or if they do have good credit, now you know that they could get unsecured financing. Here's an idea of the rates. Here's an idea of the terms. You need to know that this fee exists here, Mr. Customer. You're going to pay about a 10% fee, but you can't get something like this at a bank or on your own. It's a fantastic program because it's no doc, especially for a startup. Now you have all of those talking points. You want to let a customer know, look, this isn't a system where we do it for you. You're applying for credit. You're using credit. You're paying the bill. There are things as part of that process that only you can do, but our advisors will spend as little or as much time with you as you'd like them to spend through the process. I can even give you a link to what happens with our customer communication and our advisor team so you'll know exactly what to expect. And by the way, give me as many phone numbers as you can so that way I can make sure they can get in touch with you, and make sure you expect from the business credit advising, a call from the business credit advising team. So as you can see, as you go through this training, now you can kind of speak to these things and be able to, not give all the detail I gave, but be able to provide enough information and insight where the customer knows exactly what to expect. So I hope you enjoyed this training. I'm going to go ahead and wrap this up. I don't have any other questions. I'm going to go ahead and wrap this up. If you do have any other questions, go ahead and type them in the chat. And otherwise, we'll wrap it up for today. So I'll have this available probably in your back office as soon as tomorrow. It'll be available, and most of you won't see it, but then we'll even be using cutouts from this as essential partner training moving forward. So that way, everybody knows exactly how to set the right expectations that we can meet and exceed to make your customers happy, make sure they have an awesome experience, and they give you tons of referrals. So I don't have any other questions, so I'm going to go ahead and wrap this up. I want to thank everybody very much for taking the time to attend with us today. I hope you have a great day. If there's anything we can do, please reach out to us and let us know. We're here to help make it as easy for you to sell business credit as possible and financing as possible, and to help you make money with business credit and financing. So if there's anything we can do along the way, please reach out to us and let us know. Thanks, everybody. I'll be able to, yes, you will. Somebody just asked, could they be able to review the webinar? Yeah, I'm going to go ahead. What's great about Webinar Jam is it puts the webinar on YouTube live right now. So I'm going to go ahead and notify Joni on our team that the webinar is live. She'll get it to Megan, who will put it in the back office. It usually takes about till the next day. So sometime by tomorrow, this will be available for playback, and you can get it by going to partner resources and then going to live training webinars, and it will be the most recent one there, and you'll probably be able to access that as soon as tomorrow. So again, everybody, thank you very much for taking the time to attend this webinar. I hope you have a great day. Thanks, everybody.